Welcome back to the Teaching Tax Flow podcast, everybody. Episode 196, part 2 of 2. We are looking at that IRS Databook for fiscal year 2025 and why we're at part 2, right? This last episode, we looked at really the administrative observations overview of what that data book has in it. This time, we are diving even deeper into the C, I guess we can call it, of the compliance and enforcement side. So if you don't know what that is, you're about to find out. As always, Chris Picaro, welcome back to your own show, sir. Let's cut into this one. This is, again, where I get a little dorky because I love trying to find correlations in this data book when these pop up. What do we got?
Well, excited. Yep, this year we're going to do 2 episodes. This is the second episode. So if you didn't watch or listen to last pod episode, definitely check it out. We dove into the reporting side, administrative side of the data book. This episode, we're going to give you our top 7 observations from the compliance and enforcement side. Remember, one of the 3 laws of teaching tax flow, tax agencies are involuntary business partner. Wouldn't it be nice to have the playbook if you're of your opponent before you play them in a sport, or have all the interview questions, or have a copy of the ACT exam before you sat down and took it? That's it. We have the playbook from the IRS. We have their annual report. In teaching tax flow, we do not look at the IRS as an enemy. We don't look at them as an ally. They are an involuntary business partner. They are an administrator in the tax system. We talk a lot about that in Defeating Taxes, the book. Oh, grab a copy, by the way. But let's jump into our top 7 observations. And again, I think that people are going to be keenly interested in what we're going to divulge here. Remember, the federal government's fiscal year ends September 30th. So this is all the information from October 1st, 2024 through September 30th, 2025. So this is really rather recent information when it comes to government reporting.
Yeah, fresh off the press. So I got my pen and my trusty pad of paper here. I got a couple of things written down. But before we get into this one, Chris, if you can, for those that aren't familiar with it, let's define what compliance and enforcement really is.
Right. Sure. Well, compliance and tax compliance is the and enforcement means that are you following the rules, and how's the IRS enforcing the rules? How are they examining people? Are they auditing people? How are they auditing people? What people are they auditing? How's that correlating to so enforcement has to do with compliance, because tax compliance is the process of filing a tax return, and enforcement is the process of making sure that the tax returns you've filed are accurate. Where we come in, legally and ethically reducing the tax you pay on the said tax return. So yeah, let's jump in. Number 1, which I think most people are going to be keenly interested in, as I said, audit coverage declined overall. So for the tax years between 2015 through 2023, the IRS examined or audited 0.36% of individual returns. So approximately 1 out of every 290 to 300 individual returns were audited. For corporations, examination rate is 0.57%. So approximately every 1 out of 200 corporate returns are audited. 1 out of 300 individual returns were audited between 2015 and 2023. So that's a little bit of a decline from previous years. So ultimately, audit coverage was lower overall, but the IRS still focuses heavily on certain categories of taxpayers. So your chances of getting audited are less right now than in the past.
There you go. And I'm sure
so
many
change
people
based on your profile.
Exactly. And I'm glad you said that, because I'm sure a lot of people were waiting there like a cliffhanger, right, to tell them what triggers that audit. And we don't know exactly. It's a combination. It's, the luck of the draw, we can call it, right? I'm sure some things, like we've mentioned in past episodes, can increase it. But there is no checkbox you can do to avoid it, right?
Right. We know that each return is scored by the IRS. We don't know exactly how that scoring occurs, and that scoring indicates the chance that there's a compliance gap or there's an audit. So let's start diving into who is getting audited, even though less people are. High income taxpayers remained a major compliance focus. So for individuals with $10 million or more of total positive income, the cumulative examination rate was 7.9%. So if your income is 10 million or more, first of all, congratulations. This is your audit rate is about 8%, as opposed to 0.36. So ultimately, it's about 20 times more likely you're going to get audited if your income is $10 million or more, and that's a consistent figure from the previous year. So John, I'm sorry you've got a high audit risk.
Yeah, we'll see what happens. And I forget what episode it was, Chris, but I know we talked about this one a bit. And it was a great conversation. I wish I remembered which episode it was. I'll have to go look at our transcripts. But I remember, and I'm not going to take it, verbatim here, but you had mentioned why that likely is the case, right? Is it's probably because there's a lot more, again, activity on those returns. There's all kinds of moving parts. And when there's that many moving parts, it's not like the IRS is going in and saying, you know what, we are going to find this massive discrepancy and go after them. And, it's going to be this huge, public court case or any of that. It's not
Right.
really that at all necessarily. There's just that discrepancy and they're trying to solve that. They're not going in badges flying, guns ablazing, all this stuff. They're just trying to find the discrepancy. Correct?
And there's a lot more meat on the bone if your income is $10 million.
Very true.
Right. That's or more.
Right.
Here's the third one. Very interesting. We're talking about IRS audits. The IRS closed fewer audits in the fiscal year 2025. So they closed a little under 500,000 audits. 497,621 tax return audits were closed in 2025 fiscal year. That's down from 505,715. So the point is 7,900 fewer audits were closed, which is a decent amount. I mean, that's
a good amount.
That's a good amount, right?
And when you say close, like what exactly does that mean? Like they've closed the book, they've either found something or not found something, but they're not moving forward with anything else?
Right. It's resolved. Yep. The audit's been closed. It's not lingering around like a bad itch. So what does that represent? It's about, about 1.5% less audits are closed than the previous year. Now there could be because there are staffing issues with IRS. It could be a lot of different things. Here's another one, John, number 4. Most audits are still done by mail. So in our world, we have 2 kinds of audits, right? We have a correspondence, meaning it's done by mail, or we have a field audit, meaning someone's meeting you in person. Most people fear the field audit the most, right? Something by mail. Now, we always talk about in Teaching Tax Law and within our media company here that don't ignore an IRS notice. That's the worst thing you could do. So if you get one, though, address it. But for the fiscal year 2025, over 81% of IRS audits were correspondence examinations, meaning they mailed you a letter, said, sorry, John, you said your tax is this amount. This doesn't match our records. We feel it's this amount. That's up from 78% the year before. A 3% increase is very significant in 1 year. So what's that telling us? The IRS is probably understaffed. They're starting to use software, probably AI, some type of matching programs to identify when something doesn't match the transcript. So remember, most of the forms you receive, tax forms, are also furnished to the IRS. So when there's a matching problem, or its IRS might say, I'm going to audit one specific thing. So for instance, if you're, let's say you're
mileage.
self-employed. I'm sorry?
Let's do maybe mileage.
Yeah, let's say you're self-employed and your mileage makes up 50% of your income. Okay. Here's what you have to understand. If you put the wrong SIC code,
oh gosh, what does it stand for? I'm stumped here.
I thought yes, the SIC code is the industry code sector. I think it's like sector industry code. But whatever, you put the wrong 6-digit code on your Schedule C, and you don't say that you are a Uber driver or a meal delivery driver, and you put in there consultant, and 50% of your income goes to mileage, there's a higher chance you're going to get audited versus if you use the right industry. And that could be a field audit. They could just send you, hey, something looks funny. Send me your mileage log. Boom. So
Done. And it's
4
standard
out of every
industrial
5 audits.
classification. Is that it?
Pardon?
Standard industrial classification.
That sounds, yes, SIC.
I had to look it up. I completely forgot.
So 4 out of 5 audits are done by mail. That gives you time to organize your documents, gives you time to get the right proper representation. And that's up 3%. The remaining 19% are still field audits. Ooh, but field audits generated $19.1 billion of additional tax, where correspondence audits only created $7.7 billion. So field audits are fewer, but they produce much, much larger tax adjustments. So think about that.
They're going in hot and heavy.
Right.
This podcast is brought to you by Strategic Associates. Are you a high-income earner, real estate investor, or successful entrepreneur who is frustrated by having to pay $75,000 or more of annual tax liability? If so, Strategic Associates can help. Your first step to saving thousands, if not hundreds of thousands, is to contact Roger Roundy at roger@strategicag.net or by calling 801-641-2956 and be sure to tell him TTF sent you.
So field audits, as I do some quick math here, field audits produce almost over 70% of the dollars, but represent less than 20% of the examinations.
Interesting. I don't even think
Very
we've ever covered.
interesting.
I don't know if we've ever actually mentioned that in the previous years that we've discussed these. Maybe not, but that's pretty impactful. That's huge.
Yeah, I mean, field audits are typically reserved for people with more complex tax issues, larger dollar returns, businesses, and taxpayers with much more complicated records. So if you're getting a field audit, they're all serious, but that's much, much more serious. If that makes
So if you're
sense.
making $100 million a year, you might as well get some couches ready for your auditors every year.
Right. Or, one of the things that we do in our private CPA practice, and most really good practitioners do, if you're a tax professional, you're watching this or listening to this, we want your comment. Comment what you guys are doing. And this is the tax preparation team. So I'm on, as you know, I'm part of the private CPA practice. I'm on the tax planning side. But our tax preparers have a process where we're actually preparing the return as if it was going to get audited. All of the work papers, all of the source documents are very organized and put in tied out, ticked and tied. So we have several layers of review. So if we did get an audit, we're prepared for it. Now, could the IRS say, well, this business trip, they could argue some things. But at least, we're looking at 4 out of 5 audits or correspondence that we can easily reply to.
Mm-hmm. So really the work's already done. And it's, like you said, you're in preparation for if that were to come upon it anyways.
Right. You should be preparing a tax return with the assumption that it's going to get audited. And if it does get audited, do I have all the information available now instead of scrambling around?
Yeah. It's like running electrical or plumbing in a house. Mark where you put the wires, mark where you put the pipes, in case you want to hang a picture frame there.
And something could change or something, but yeah, absolutely. Absolutely. So the 6th out of 7 refund protection exams became more effective. So the IRS conducted almost 21,000 refund protection exams for the fiscal year 2025, and that was down from a little under 24,000. But the dollars protected increased from 8.8 billion to 10.7 billion. So the IRS appears to be identifying larger and more significant questionable refunds claims while conducting fewer refund protection exams. So again, here's the theme, John. Less enforcement by numbers, bigger dollars collected. Why? Because the IRS is getting better at identifying, in my opinion, the higher risk, higher dollar cases.
Sure. Which makes sense for them. Oh, no, sorry. Go ahead.
Not just throwing a blank, like, hey, they're much more targeted, let's put it this way, at who they're looking at.
Because like we've mentioned earlier on too, this might have been the last episode, but they're allocating resources, staffing time, all this stuff towards these examinations, right? And at the end of the day, if you think about them, back to them being your, you know, business partner. I know some people cringe at thinking that. If you're in business for anything, you're not going to waste your time, you know, cleaning up the trash if you have somebody that does. You know what I mean? Like they're
Right.
going after where the dollars are for them. Otherwise, they don't exist, right? They got bigger problems.
Right. Exactly. So now the final one, number 7. This is interesting because I just had a conversation with someone about I don't know why the person I was talking to had someone in their life that didn't file tax returns, and they were assessed about $300,000 of tax. I had another person that I ran into over the last week that didn't file a tax return and got assessed $180,000 of the tax that they really don't owe. My point is substitute for return enforcement surged. So automated substitute for return closures increased from 442,000 to 592,000. That's a 34% increase. The assessment dollars went up dramatically from 82 million to 2.9 billion dollars. So what does this mean? The IRS is saying if you were supposed to file a tax return and you didn't, they have the authority to file the return on your behalf based on the information they have and assess you tax. So John, if you sold $1 million worth of digital assets, let's say a cryptocurrency, and because you didn't make money on it, quote unquote, or you didn't make a lot of money, you say, I don't have to put that on my tax return. I'm not going to file. That was my only income. I don't file. The IRS will file that for you. And they'll say, all right, John, you have $1 million of sales and you have $1 million capital gain. You have no evidence of cost basis. So the point, think about this, 34% in 1 year increase on non-filers. So substitute for return means the IRS, hey, don't worry, taxpayer, we're the IRS, we're going to file that return for you. And we're going to make it, as painful as possible. So this is a major warning sign for non-filers because when the IRS prepares a substitute return, it will not include deductions, credits, or other taxpayer favorable items that would have appeared on the return otherwise. And think about that, from $82 million to $2.9 billion in 1 year. So the IRS, to me, they're just getting smarter.
And with that, I mean, I highly doubt that they are going to do it for you moments after a tax deadline passes. And you're probably not going to get that notice that they've done it for you moments after they do it. So interest penalties and everything else is probably going to be stacked on top of it, which then I imagine that in this case, people are going to have to be on the defense instead of the offense at that point, which is not a pleasant place to be, right?
So as we wrap it up, what are the themes? Less compliance cases, higher risk taxpayers being examined, non-filers being taken care of rather promptly, and increase in compliant or in correspondence examinations, decrease in in-person examinations.
Lots of new stuff. And this, Christina, we mentioned earlier on this one and the other one multiple times, a past episode, this is an IRS playbook. And to me, right, when you say that, I think of, all right, it's going to tell us what they're going to do, which it does, right? Like literally that last example we gave, I think hit it on the head. It's showing a trend of what they're doing more of. And that trend is likely to continue in that way. So like you said, here's your warning sign. Here's the big red flag to you to get your beep together if you haven't done it, because they're coming for you. If not, they're no longer just sitting behind the desk drinking Diet Cokes and sipping on ramen noodles and stuff during the day. They're actually going to work. So bad example, but you know where I'm going. But so anybody that's listened to this one and that last one, right? We've done some different this year. We've talked about a little bit earlier on. We've split this into 2 parts, right? If there's anything, and Chris, you mentioned as well, we'll put the link in the show notes here. Click on that. You don't have to read the entire thing if you don't want to, but take a peek at it and see what areas in that really pique your interest, right? If there's anything in there that we didn't cover that you want to know more about, obviously we can't cover the entire data book, even if we did this over 20 episodes. Let us know what you think. Let us know those topics. Message us however you feel comfortable. Drop us a line, let us know, and we'll be happy to get on it. Right there, big guy?
Sounds good. Yeah, would love to hear from you.
Awesome. Awesome. Well, Chris has been doing this for a long time. You do not want me ever filing a return for anybody. This guy knows way more than I do. So we'll have him back to his own show, as always. So everybody, you have a great, great week. Let us know your thoughts. Check out the defeatingtaxes.com. Great resource for you. We'll drive you a couple places. Again, check it out. We'll see you back here again next week on the Teaching Tax Flow podcast. Have a great week, everybody.
The information in this podcast is educational and general in nature. It reflects the opinions of Teaching Tax Flow and does not take into consideration the viewer's personal circumstances. It is not intended to be a substitute for individualized financial, legal, or tax advice. Consult the appropriate qualified professional prior to making any decisions. Securities are offered and supervised through Cabin Securities Inc. member, FINRA, SIPC. Investment advisory services are offered and supervised through Cabin Advisors LLC, an SEC-registered investment advisor. Chris Picciuro is a registered representative of Cabin Securities and an investment advisor representative with Cabin Advisors LLC. Teaching Tax Flow is an independent entity and is not affiliated with Cabin Securities or Cabin Advisors.